you all enjoyed the gala dinner last night. Thanks to Salsa Group, we were fortunate to have this experience at No Camp Stadium. I really enjoyed it myself, and I hope you all enjoyed this amazing stadium and the gala dinner experience. So, yeah, we'll start the third session of the 17th IREPAS meeting this morning. As always, this final session is the panel with the committee chairman, the chairman of the IREPAS committees. Let me start by introducing the chairman of the IREPAS committees, starting with the Raw Material Suppliers Committee, Mr. Yanis Mimaroğlu. Traders Committee is represented by Mr. Wilhelm Alf. And Billet Suppliers Committee is represented by Ms. Margarita Zvezda from Yevraz, first time. And the Rebar and Viron Suppliers Committee is represented by Mr. Kim Marti. Mr. Marti is, of course, the chairman of IREPAS as well. So, shall we start with the findings of the Raw Material Suppliers Committee, Yanis?
Yes, as you wish. Good morning. It's working.
It's working.
So, good morning, ladies and gentlemen. On behalf of the Raw Materials Committee, like Murat has done already, I would like to express our gratitude to SteelOrbis and our President Kim Marti for the organization of this IREPAS conference in Barcelona, especially for the last night event and visit to Camp Nou. I'm sure that many of us, while watching Barcelona next Champions League matches, we will not forget to remind our children or to our grandsons that we were also in the stadium, that we saw the caps of the club, that we took photos of the golden shoes of Messi, that we heard almost everything about Barcelona from a member of the board of directors. Thanks again. The participation in our Raw Materials Committee attended a new record of 43 participants this time. Reading the list of participants before landing in Barcelona, I thought that there is a large number of companies wishing to sell steel scrap and other raw materials. It is not the case. It is maybe the first time that all suppliers coming from most different places of the world agreed that there is lack of scrap to be exported from their countries. During the first months of 2014, even the last months of 2013, the exports from USA and Europe are already decreased as much as 30 to 40% in comparison with last year. This is due to the very strong, especially in the US winter. They lost about 25% of the working days the first 2 months of the year, but mainly to the strong demand of the local steel industries in almost all countries. US suppliers said that even if the international market was reaching the level of $400, it will be difficult to compete the actual strong competitive market, domestic market. Same situation was presented from European suppliers coming from Germany, Belgium, Sweden. Substantial decreasing of exported quantities from Romania, only 72,000 metric tons last month out of more than 150,000 regularly because of the low collection prices they are offering. It seems that availability will continue in Rostov and the other Azov seaports, especially after the opening of the navigation in the rivers, means around mid-April. But of course, if the international market is reaching at least the same level with the domestic Russian factories. The Russian exporters are facing now an important financing problem, as the banks are taking serious measures after the events in Crimea and generally in the East Ukraine. This may lead to new financing conditions for the suppliers and their clients, at least for a period of time until the normalization of the relations between Russia and Ukraine and the rest of the world, of course, thinking about sanctions and so on. In the same time, a new fact that was underlined from some participants is the demand coming from countries like Mexico and Egypt, which will further affect the exports availability to the traditional suppliers. we estimate that Mexico will need around 1.5 million tons annually. So it's a player concerning raw materials availability. At the same time, the participants took under consideration the end steel products market, which doesn't allow the producers to pay higher prices than a certain level, corresponding to their sales. A participant said, very correctly in my opinion, that every time we are reaching contracts higher than $400, $400, we are paying back later with contractual prices down to $330 or $340. We noticed also that during the last 3 years, scrap prices seem to follow similar yearly trends, though price levels have declined each year. So, the most important for raw material suppliers is to keep for steel scrap as well as for other raw materials, like iron, rye, and so on, stable prices, with a logical fluctuation, of course, allowing both suppliers and producers to work efficiently so that the raw material suppliers can compete the domestic demand and the producers to face the exports competition. I would like to underline the general optimism of the participants concerning the growth of the steel industry in the coming period of time, and I wish that we'll see the same optimism in Berlin by the end of September. Thank you for your attention.
Thank you very much. Next is Traders Committee. Really?
Yeah. Well, in preparation of this IREPAS meeting, we have received from SteelOrbis questions which came from the panel and from the participants here at the IREPAS meeting. And so we went through these questions, and some items and some questions were discussed quite strongly. Others were relatively shortly discussed, and seems, especially the Krymna issue, was not that much of an interest to the participants anymore. It looks like everybody is more or less convinced that this will not really lead to massive interruptions in the flow of trade or in any increasing prices of raw materials whatsoever. So the more interesting questions where we got more response from was the unbalance of European long product oversupply versus consumption, to find out what is the real utilization of long product mills in Europe. We got some figures which are quite diversified. Some are of the opinion it's between 75 to 80%, while others think it's probably closer to 65, maybe even to 55%. We think that this is mostly pretty much depending on the origin and on the country. Kim Marty will certainly tell this better, but the audience was of the opinion that certainly in Spain the utilization will and shall be much less than in countries like UK or Ireland, UK or Germany. And so probably if we take the 70%, 75%, probably it's a good figure to name for the entire EU 27. The question was also raised if there is still measures to be made from the mills to reduce further capacities in order to bring this in balance with the demand. But here again, we did not come to a real conclusion, because the audience was of the opinion that it's already going for quite some years that we have this imbalance, and there have been some measures, but besides some closures we've seen in Liepaja by accident, in Tem Steel, and with Corrugados Aspetia, all the other mills in Italy and in Spain and in wherever are still existing and are still producing, certainly with a less utilization of capacity, but it's not really seen that some of them will close eternally and will really leave the market. So we believe that this imbalance will still stay for a while in Europe. Then we discussed about the anti-dumping issue of Turkish wire, Turkish rebars. On April 18th there will be the preliminary result coming up, and in August then obviously the final one. So there are very different opinions whether it will go from a low one-digit number to even critical circumstances. So I think there is still a widespread of suspicious of what the commercial department is going to do. On the Algerian market, we also had a question in what extent the new coming up new capacities from Tosyali, from Qatar Steel, and eventually this project from Egypt, which is still on ice, but eventually will be reopened, to what extent this will have an effect. And I think the audience was pretty clear that this will certainly have a big concern for these countries supplying right now to Algeria, namely Italy and Spain. So they will certainly lose market track. At the same time, people from the audience said that you always have to be very careful in Algeria because of energy problem, because of logistic problems and so on. So that does not really mean that steel, imported steel, is really uncompetitive to local steel production. And especially imported steel is more reliable in regard of delivery time, of quality, and so on and so forth. So still, everybody is of the opinion it will have an effect. Certainly, it will reduce the chances of European steel mills. But first of all, those capacities have to be there, and then the final consequence can be better observed. On Krimna, as I said, there was really not much of an interest in the audience, so we left that pretty much out. Then China, oversupply and the development in China with regard to production going out because of environmental reasons. The audience was of the opinion that those mills which are definitely not in line with today's environmental requirements will probably go out in a short while, but at the same time most of them will be somehow replaced by new, more modern mills, and probably even with mills which are more efficient and so even bring more capacity. So it's unlikely to believe that those mills which will be closed because of environmental issues will just disappear and will not be find a new place for production. Well, then on protectionism, we also raised this. There are 35 cases only on China. So these safeguard measures, which probably are mainly coming from the United States, are certainly an issue. We've seen it with the anti-dumping of wire rods against lots of other countries, but also now on rebars, on some flat rolled and specialty steels, and. So I think protectionism is going on. One member of the audience also raised the point that Algeria eventually can change the 15% duty advantage for European mills, that it's eventually likely that this can be stopped, not soon, but in medium term. So that, of course, would also be another hurdle, and certainly would also be considered as an anti-dumping or a protectionism safeguard measure. So we went then to the real question of a trader, which I think is as old as the IREPAS and as old as a trader is existing. Namely the changed role of a trader, and to define and redefine the process and the role of a trader in the business, because we also see these newsletters which are being spread around, which are getting so fast information from everywhere to everywhere, And I was telling the audience that 30 years ago there was an explosion in Venezuela on their blast furnace, and because we had a guy on the spot, he called and said, well, there is an explosion, so you may buy slabs. So over a week we bought slabs, and then 10 days later, finally in Metal Bulletin there was a little note that in Venezuela something exploded, that they are still researching what's going on. So this was after 10 days. Yeah? Today it would happen, and a second later it's on everybody's table. So this, of course, changes the role of a trader dramatically. Information is not anymore a sales advantage as it was in the past. Also on currencies and everything. I remember in my first days selling rebars to Greece, the people did not know what is the difference between Italian lira, Spanish peseta, and only by that you could really play and you could gain a certain extra on top.
That's why we entered euro now.
Exactly, and that is why he entered euro now to avoid this. So, well, in the end of the day, the audience was of the opinion that certainly a relation to a mill and a customer is very, very vital. You need to have a personal relation, of course, and you have to show that you are really doing a solid job, not only with financing, which a lot of people can do, but that there is a lot of trust in a business, because we are talking usually about multi-million-dollar business. So if the prices are going up, you need someone where you can trust on that the material is being supplied. If the prices are going down, you need to have customers where you can be sure that the material will be taken. And of course, if there is any problem on the road, on logistics, on claims, on this and this, that you have to serve your customer and your supplier in a proper way. And well, to address to the suppliers and the customers that such a service cannot be just €1 a ton, but it has a value. Yeah. Otherwise, for $1 per ton, you can work with a broker who can just, or who just brings two people together, but he cannot really take a role and a driving role in that business. So he can just give you an email number and you do the rest, but it's not what we consider as a trader's role. So we, one particular question came also up on the wire rod anti-dumping of China in Europe, and we rechecked that, and definitely the issue or the anti-dumping will expire on 6th of August this year. However, only if no mill is asking for a review, which is most probably going to happen. And if the mills or the producer, the European producers, will request a review, then it will take probably another 15 months for a sunset review. So we are of the opinion that wire rod imports from China will not be happening for the next.
So you expect them to ask for
even further on, yeah. Well, that was basically what we discussed in our traders session, and yeah, thanks for listening.
Just one question. I was not able to take notes on that. Regarding the oversupply situation in China, you expect some mills to go out in the short term, but will be replaced by new modern mills. So you don't expect any change in the short term. How about mid to long term?
Well, mid to long term.
Hard to say, probably.
It's very hard to say. I think it's probably also, it will be in connection with the overall economy in China, and to what extent they still want to increase the infrastructure projects and so on. So that there is enough capacity, I think it's clear, but we also know that there are a lot of individual owners of steel mills, and like in Europe, nobody really wants to go out of a business which is doing since years and decades, maybe, and even from family founded. So probably it's the same over there like it is in Europe, that you do what you do and that you hardly change to underwear.
Okay, thanks. Margarita, for Billet Suppliers Committee.
We've had quite interesting audience in our Billet Suppliers Committee this time. We've had representatives both from the countries in Black Sea Mediterranean region, such as Ukraine, Russia, Turkey, traditional participants. We've also had Brazil, not for the first time. And we've had representatives of Philippines, which was a nice surprise this time. So we've had quite an interesting discussion and perspectives from different parts of the world. Unfortunately, we didn't have any representatives of Iran this time, though there were some questions addressed. And obviously, this is a country which presents an interest in terms of the influence on market balance in Black Sea Mediterranean region, and we all remember how drastic impact it has. I mean, the changes in terms of buying ability of this country, how it impacted the market conditions in the region. That was a preamble. Speaking about some precise points in our discussion, we've had basically coming to figures. What we observed in 2013 in evolution of billet supply from main exporting countries in the regions. In particular, I'm talking, of course, about Ukraine being the largest square billet exporter in the world, and Russia. We've seen that generally export volumes have been very stable. Basically, for Russia, there were no gain and no decline. It was flat performance in terms of volumes. For Ukraine, there was a very modest, very small marginal, I would say, decline of 1.4% versus the figures of 2012. Overall, Russian export was about 4.4 million tons in 2013, and Ukrainian one is about 6.2 million tons. So overall, those two countries supply over 10.5 million tons of square billet in the international marketplace. At the same time, it's worthwhile noting that performance by different producers has varied greatly. So, for example, Euraz has increased export of billet quite significantly by approximately 400,000 in 2013, which is explained by some production modifications. We've closed the plate mill where we utilized we utilized steel, so we've got some additional billet, steel in the form of billet as a result. And some of our competitors, such as Ural Steel, for example, they have closed the oxygen arc furnaces, and they have open cast furnaces, and they have dropped exported volumes of billet significantly. But overall, the performance was flat. Much more interesting situation was observed in terms of Turkish billet supply evolution. We know that Turkey is a very interesting example of a country which is both an importer and an exporter of square billet. But traditionally, Turkey used to be net exporter. In particular, in 2012, Turkey exported about 3 million tons of billet, 2.9, and imported 2.4. So there was still 500,000 net exports. The situation has drastically changed in 2013. Exports has declined almost twice to 1.5 million, and imports increased to 3.1. The reason behind of such evolution in exported volumes is basically lies in parities between square billet and ferro scrap prices. As you probably remember, big chunk of square billet supply from CIS, for example, it comes from BOF mills. While for Turkey it's completely different. Most of the billet supplies are electric arc furnaces. And supply-demand balance in ferrous scrap market in the past year has led to a situation of sustainable competitive disadvantage, cost disadvantage of EAF suppliers versus BOF suppliers. Considering that market conditions have been fairly tough for suppliers, in principle, BOF producers has taken an advantage. So basically, they have had opportunity to pass part of their margins to their clients in the form of price discounts, making electric arc furnace producers less competitive and urging them to increase the sourcing of square billet instead of ferrous scrap as a feedstock. We have also seen this, by the way, in slab imports by Turkey. Turkey has significantly increased the volume of merchant slabs imported in the country amid such situation. We actually believe that structural disadvantage of EAF mills will continue for some time in the next few years, which is mainly explained by supply-demand balance in all the major raw material sectors. For example, as probably all of you know, iron ore prices, the mainstream forecast for iron ore prices is to decline within the next few years. Coking coal prices, there should be some gains, but they will be modest. And for ferrous scrap, until 2020 approximately, we do not expect that this segment will be oversupplied, mainly because only around 2020 China will probably start being an exporter of ferrous scrap. Until that time, which will significantly impact the market balance in the global marketplace. But until this time, most likely it will be still a bit overpriced as compared to iron ore and coking coal. Speaking about other countries represented at the billet suppliers committee, Brazil has been decreasing square billet exports. We've also touched the topic which is interesting for everyone, the topic of World Cup and its impact on the steel consumption. And the feedback from Gerdau was that there wasn't actually much of an impact, unfortunately. And in principle, talking about end-user demand in the countries, evolution in the countries represented during the billet committee, we must admit that growth is very modest or non-existent. For example, for Russia, long steel consumption last year increased by a marginal 2.5%. Ukraine has indicated some declines. Brazil is also, economic growth is slowing down. The only bright spot were Philippines, which shared with us very positive figures that rebar consumption in the country has jumped by 40% over 1 year, and they expect another 30% gain in 2014. But unfortunately, this was an exception. However, we do not expect that slow growth will significantly impact the situation in terms of exports of long steel products from either Russia or Ukraine. We rather expect this is going to impact the utilization of the steel producers. In particular, because for Russian producers, those capacities which came on stream or which are coming on stream, they are mainly electric arc furnaces, and for them, the question is, considering the current price levels and how we expect them to evolve, for them, the question will be either to buy scrap and produce rebar, for example, or not to produce, basically, not between either to sell it domestically or export it. And for Ukraine, the situation is a bit different, but again, we do not think that exported volumes of finished long steel products will significantly change from those two countries in the near future. Other topics we have touched, basically, of course, as I already mentioned, it was disappointed that there were no Iran representatives among us in the Billet Committee. However, I must say that despite the fact that in the past Iran used to be a big player, and now there are some signs that international sanctions might be eased, we expect that any potential positive impact, though quite, it might be quite sensible in the short run, is unlikely to last very long, beyond probably a couple of years, because Iran has plenty of new steelmaking projects. In the past, it used to be a big importer of square billet. It hasn't been for the last 2-3 years. And though, as I already mentioned, if Iran comes back, it will definitely make a positive impact on the regional supply-demand balance. It's unlikely to last long, because in any case, considering the raw material base and also low energy costs in Iran, Iran has all reasons and chances to become self-sufficient in terms of semi-finished steel products. We also touched the topic of Ukraine and Russia, political turbulence between Ukraine and Russia. It was actually mentioned that for the moment, indeed, we think that impact on real supply or competitiveness of Russian and Ukrainian producers have been fairly limited. At the same time, there is still a big ambiguity on how the situation is going to evolve. For the moment, it's worthwhile mentioning that Russia experiences, of course, already experiences negative impact on economic growth because of this, both Ukraine and Russia, obviously. But for Ukraine, it's less predictable in a way, but for both countries, actually, it's fairly unpredictable. But Ukraine is plays a passive role, contrary to Russia. In Russia, it's now estimated that GDP growth for 2014 will drop to 0 or even go into a negative range, provided 0 would be provided that no additional sanctions will be imposed. And also fixed asset investment, which, as we all know, is a major indicator, key indicator for steel demand evolution, has been negative for the first 2 months of 2014, -5% versus the same period last year. It's still, I would say, we have not been very optimistic in terms of how situation resolves itself. I would say that nobody should be very optimistic. We don't think that we still believe that there will be some reasonable resolution, and ultimately no long-term effect will be in place. But at the same time, considering that at the moment, as you probably know, ministers of foreign affairs of Russia and USA have not reached any agreement even regarding the armed forces of Russia now concentrated along the Ukrainian border. I would say nothing can be predicted for sure in terms of how the situation develops. So this is more or less it. From my side, I haven't mentioned Egypt. I'm sorry for this. We also discussed Egypt. Saying briefly, Egypt has not yet recovered in terms of long steel evolution from the years before revolution in Egypt. So for the moment, for example, consumption of rebar is only 6 million tons, while capacity is 10 million tons. So it's a big leap. which can be closed still and should be closed. And the main issue there is that most of the demand is coming from illegal construction. So unfortunately, the risks in this respect are quite high. So if the government decides to prohibit illegal construction, this might have an unpredictable impact on rebar, rebar sales, and obviously imports of square billet. But at the same time, Egypt is also, in the long run, it's expected to decrease its imports of square billet, in particular because of new steel-making project of Egyptian steel company. So by 2016, demand from this country is also going to drop. That's more or less it. Thank you.
Thank you very much, Margarita. And next one is Rebar and Wire Suppliers Committee.
Yeah, good morning, everyone. Our committee meeting started with a very good attendance, highest that compared with last IREPAS, so it was good to see that. We were welcoming back some members that were missing for a few meetings, like Belarus or Moldova colleagues. Italy was coming with a very big group this time, which is always a good sign. Poland was our colleague from CMC was incorporated to the meeting, so that's good news. And then we also welcome our new colleague from República Dominicana, from Inca. So as usual, we were going through general state of the markets in different regions, and we started by the markets in the GCC. They're always the markets that show better performance, and that was the case this time as well. We, well, basically, we confirmed that all markets there, we were through Qatar, the Kingdom of Saudi Arabia, Oman, Kuwait, and the Emirates. The economy is still performing very well, based obviously on solid budgets, financed by the revenue from the oil, which is still coming very, very good. And that's allowing all the governments there to do a lot of jobs, to spend a lot of money in jobs in infrastructure, especially in Qatar. Qatar is leading that. And also in the Kingdom of Saudi Arabia, there are many projects. They are trying to relocate the population in Saudi Arabia is the biggest in terms of the area, is about 30 million people. So they have to relocate some of them. They are building new cities, and then obviously they are building all the infrastructure that needs to be done in order to connect these new cities to the rest of the country. And that's also making that or coming with a good budgets in terms of infrastructures and construction business. So all of them, they show good figures in terms of growth in GDP, 6%, 7%, 5% in all the countries, and in terms of growth of reinforcing bar and wire rod for the year, expected in the highest in Qatar, plus 16% for this year, coming from 13% last year, and in all the rest, growth of 5%, 8%. So in general, all business for long products in that area is going to be good. Although they don't expect a lot of increase in imports because there is new capacity coming in, or they are planning to increase utilization of existing capacity. So that's the growth is going to be based on, or is going to be supplied by local players. But in any case, good news that obviously the business there is strong and healthy. Then we went to do general comments country by country in Europe, and in Europe, obviously, clear we still have two clear areas to differentiate. This is the north and the south. In terms of the north, construction activity looks good in Germany. In Germany, there is a kind of boom in residential. A lot of European people that they want to get rid of profit for the money in terms of interest. They go to Germany and they buy flats. So in the cities in Germany, flat price or real estate price is going up, and that obviously is making or is promoting new construction and new people thinking on projects, residential projects. As well, we discussed in Poland also. Poland is receiving a lot still money from the European Union. In fact, it is in terms of receiver of money from the European Union is the country that is receiving more money at this point in time. In next year is going to receive 1.6 billion euros, and all that, or majority of that, is going to go into infrastructure projects. The country needs to be updated in terms of infrastructure, roads, and things like that. So they expect a good market for 2014. If we then went to the south, and obviously the south is the sad part of the story, although we believe that in countries like Spain and Portugal, we probably will see the last year or even the first year of not falling anymore in terms of steel product consumption. But not in Italy. In Italy, they still expect this year to be negative in terms of debar consumption. They say they expect probably another 10% drop from 1.7 million this year. Well, there's also one positive news from one of the countries in the south, and this is Greece. Greece is starting to see some new projects coming in. So, although from a very low level, they expect from like 350,000 tons a year. They expect the consumption in the country to grow a little bit due to this restarting of the government spending money in infrastructure. How the European mills, I think, has been mentioned here from my colleague Will. The Spanish, Italian, and Portuguese mill, the way they deal with the situation, the way they've been dealing already for a few years with the situation, is just adjusting the utilization of the plants of the mills, and also exporting. One of well, we all know that North Africa is probably one of our most relevant destination in terms of export. That is true, and the figures that the traders have been guessing or analyzing in terms of utilization, they are quite right. I mean, obviously, more 75 in Europe is a good average. More in the south or higher, lower in the south, obviously high in the north. But 75% is probably a good rate, and that's the way we deal with the situation. And obviously monitoring what's happening, expecting that at a point very soon the markets also in the south will start increasing, maybe next year in Spain and Greece and Portugal. So we will probably be able to do or to increase our utilization. Oh, sorry. Okay, after Europe, another market that was interesting to discuss was what was happening in Turkey, because obviously I believe it Sunday was a key day in terms of what will be the short-term prospects for the economy in Turkey, and we discussed that. And although politically everyone can have his opinion, but in terms of economic result of the voting, everything points as it will bring, or it will keep the economic situation stable. So our Turkish colleagues, they expect all projects that they were on stream or expected to start, like the third bridge, and all these kind of projects will come, and there won't be delays or stops. So they expect the market, the domestic market, to stay good, stable, and not seeing disruption, which is obviously good for everyone. Obviously, with our Turkish colleagues, we were, as being very one of the main sources of exports. We're discussing export markets. We're discussing the anti-dumping in US. Their opinion is that the final decision is not going to be. It's going to be big. It's not going to be big. So, in terms of anti-dumping duty, so they are very confident that they will be able to keep exporting into that market. Obviously, we're also making comments in terms of Asia. Asia is basically now a Chinese territory, so no one of us can even try to touch any in big volumes or in any of the markets there. And that was the comments. Those were the comments on export markets. We also general comments in other issues like credit or financial restrictions in a few markets. Obviously here, I think that for the traders, there's obviously they have realized that there's an opportunity here in terms of increasing their financial services to the business, because we find ourselves many times that our customers or even ourselves, we are restricted in terms of financial instruments to do deals. So that's an opportunity for our friends traders. And that was it. Thank you very much.
Thanks a lot. So, yeah, let me try to recap what we have heard so far. Starting from the raw materials side, starting with them. I understand there's still a lack of scrap to be exported from various exporting countries, particularly the exports from the US and the European markets has decreased because of lack of availability of scrap for exports. In US, the main reasons were a strong winter was one of the reasons, but the main reason, as you have mentioned, is the strong demand for scrap by local mills, US domestic mills. And the same situation exists in the European Union. Russian exporters are facing financial problems, so that also has an impact on the availability of scrap in the international market. And the committee expects problems to persist until normalization in the situation in Crimea has been reached. Also, I understand there is demand coming from countries like Mexico, significant demand coming from countries like Mexico and Egypt, which plays a role, which has an impact on the international supply and demand situation. And finally, well, yeah, in general, the suppliers of raw material needs to see stabilized international prices to keep their competitiveness so that they can serve the producers better in the market. Looking at the comments, looking at my notes basis, the comments by the Traders Committee, the traders expect this supply-demand imbalance to stay in the market for a while, even though there is the long product mills in Europe utilize their capacities at 70 to 75% on average. and there are other production cuts in other countries, still the supply-demand imbalance is expected to stay in the market. The Italian and Spanish exporters are expected to face some issues, some problems in Algerian market once the new capacities are there. As we discussed, the Chinese oversupply situation is also expected to stay in the short run, because even though some mills are expected to go out of the market because of environmental issues, environmental measures, but they are expected to be replaced by new modern mills. So in the short run, traders expect this oversupply situation to keep going. Traders also expect the protectionism to continue, protectionist measures to be introduced by and kept on going in the market. The role of a trader, the changing role of a trader in the business, the focus will be on reliability. Reliability is of essence. The service quality is of essence for the traders to maintain their role, maintain their activity, as well, probably we have to take the blame for that too, as information is no more a sales advantage for the traders. Okay, and traders don't expect Chinese wire rod exports to come back to the market in Europe, as the European mills are expected to ask for a review and continuation of the protectionist measures against Chinese exports. On the semi side, the billet suppliers committee expects the billet suppliers committee reported that the volumes are stable, the export volumes by traditional suppliers of billets in international market are stable, talking about basically Ukraine and Russia, 10.5 million tons in total, right? The performance was flat overall. The situation in Turkey has changed, being an importer and exporter at the same time, but a net exporter till 2012. Turkey has become a net importer in 2013, particularly due to the spread between billet prices and ferrous scrap import costs. Same situation is seen in slab imports, and I understand you expect the situation to continue for a while, as structural advantage of blast furnace mills is expected to continue. The export quantity from Brazil has been going down, I understand, and the Iranian situation is a question by many IREPAS members. If Iran comes back, the billet suppliers committee thinks it will definitely have a positive impact, but unlikely to last long, as far as I understand, as Iran has the chance to become self-sufficient sooner rather than later. The political turbulence between Ukraine and Russia has been discussed, as I understand, but it is hard to make any predictions for the short run. The Egyptian domestic market, the risks about the Egyptian domestic market has also been discussed in the billet suppliers committee. Particularly if government decides to stop the illegal construction, which is generating the most of the demand in the domestic market, that may for rebars, that may obviously bring the demand down and possesses a risk for the steel suppliers. On the rebar and wire rod side, the GCC market is doing very well, I understand. The economies are performing very well with solid budgets, a lot of investments into infrastructure projects, and good growth projections. The highest demand increase is expected in Qatar, and overall the long products business is expected to be good, but not for imports, as the new capacities are coming in on stream, and imports are not expected to increase in GCC. Going into Europe, interesting news from Germany. The residential construction activity increases as the real estate market is up, which creates additional demand for long products. Poland, good news in Poland too, receiving a lot of money from Europe, of which the majority will go to infrastructure projects, and a good long products market situation is expected this year. Some good news from Spain and Portuguese markets, Spanish and Portuguese markets too. It's good to hear that long products consumption has finally stopped falling, and this year we will not see any more going down in demand in Spanish and Portuguese markets, but still cannot say the same for Italy. We may still need some time to see the similar situation there. Some new projects is coming on in Greece too, with a little bit growth expectations in the market. And the committee expects next year to be maybe better than this year. In Turkey, the results of the most recent elections on Sunday stabilizes the economical situation, and projects are expected to resume, and domestic market is expected to be stabilized. The protectionist measures are generally not expected to create a lot of problems for rebar and wire rod suppliers, as far as I understand. And the financial restrictions are limiting the activities of the rebar and wire rod suppliers in certain situations, which gives some opportunities, which creates some opportunities for traders. So there's still a role for everybody in the market. Thank you for all your comments, your help in sharing the findings of your respective committees. As usual, we have collected some questions for the IREPAS committees, but before I move on to those questions, I would like to ask if there are any questions from the floor at this point. Dr. Dutta, the microphone is coming. Please go ahead.
Hello. To Madam, I just wanted to see the effect of China right now, because China is now coming up with the square bars as billets and being sold in this region.
Well, basically, for the moment, we see China being active in terms of these kind of activities in very limited number of countries. Mainly, Philippines are affected, and sometimes also Indonesia. But, for example, for Philippines, consumers clearly understand that it's a risky business, and they do not want to place all eggs in one basket. You know, so they do not divert the purchasing volumes for square billet from China, which is sold as square bar, because in principle this business can be stopped at any point in time, being completely illegal. Like in case of, for example, boron added rebar, it's a manipulation in a way, right? Because you are still selling the product which is being declared, right? You are avoiding some export tariffs because you add certain elements, ferroalloys, and you sell it as alloy material. But still you are selling what you are declaring. In case of selling square billet, declaring it as a square bar, you are basically committing a crime. So in my opinion, I do not think it's going to become really major trouble. The trouble would be if China decides to drop the export tariffs for semi-finished sales, which currently stand at 25%. The export duty for slabs and billet is 25%, and we are now observing a situation when square billet and slab prices in Asia are above the prices for rebar and coils because of Chinese presence. But so far it seems that China is not intending to do this.
Thank you. Any other questions at this point? Okay, so I will move on to, oh, excuse me.
What do you foresee for the U.S. domestic in the prices as far as rebars are concerned? I mean, what's your expectation for the rest of the year? Because as we know, the U.S. prices are being so about the international market, creating sort of, maybe Michael might answer to this question, but I'm just really wondering what will really happen in the U.S., which is really affecting the rest of the world as well. Maybe Kim, you might.
Okay, it's a fact that demand, is that working? Yeah. It's a fact that demand in the U.S. is expected to grow this year, based on around 8-point-something million consumption. But at this point in time, there's a little bit of, in the first quarter, they were all expecting a very nice, also price situation, but it's a little bit on hold, just waiting for the result of the anti-dumping case. As I said, the year started very strong, and even import prices went up strongly, but after that, a significant flow of imports created again a little bit going back to square one. So, as I said, they're all people, importers and domestic players. They're all very excited about the demand, but in terms of price, the first quarter has been a little bit like disturbing in terms of imports. So 18th of April, which is the date, will be a little bit the point where we probably will see we'll have a clear picture on what's going to happen the rest of the year.
Thank you.
Also, I'd like to make a little comment on what Margaret have said. It is true that they're committing a crime if they're just trying to go over the regulations. There are any attempts to sort of block these attempts, any applications to the authorities in China that those materials not really being sold as square bars. I mean, we see this, it's becoming sort of a general trend all over the world. Now, for example, Japanese are exporting hot roll coils to Turkey with boron addition, and they're claiming that it's alloyed steel. So we see the examples just going, it's increasing, and we have to at least, I believe, do something to stop this, because that doesn't fit into the definition of free or the fair trade. I mean, do you have any suggestion? How should we, maybe, I don't know, maybe we cannot do it with IREPAS, but individually as companies, I believe, we have to do something on our own.
Nothing probably to add. Yesterday we also have heard a very interesting presentation about protectionist measures undertaken by US, and in particular wire rod issue was addressed, where China is a subject of anti-dumping for wire rod being sold into the US, most likely because of the growth in alloyed material, in boron-added material. But I would say that you see, with boron-added material, I haven't seen much activity from the steel community. Mostly countries are focusing on introducing some protectionist measures rather than preventing China from exporting this kind of steel in the global market. So maybe this is going to change, because China has mainly been focusing in the previous years with the sales of these materials have mainly been focusing on Asian region, you see. And now, at times we see China comes to much more distant destination, and then this is when we see quite strong moves by steel communities in the countries, in particular in Latin America. We've seen such examples in the US, who aim to stop this inflow of Chinese material. For square billet, I would say, or for square bar, as we say, for the moment, I think that it's a bit different story. How it's going to change, difficult for me to say, but it's not the first, it's not something very fresh. It has been happening throughout last year. We do not see a major or sharp increase of those volumes, and again, they are focused on particular country markets. Of course, if it becomes a major issue, most likely such players as Euraz in particular should somehow think about raising these methods, but realistically speaking, China is a player with which it's very difficult to deal, you know, in this respect, in terms of economic logic and so on. So we should only probably hope that China continues to be restricting the exports of high energy consuming, high polluting steel products, which semi-finished up basically those.
Thank you. Yes, Michael.
Michael Sutterdahl from Newport Trading. Obviously, China is a very interesting topic for us all. One of the main reasons why China is exporting steel, and it's not exporting very much steel, it's less than 10% of their production, is that the export prices for them are better than their domestic prices. And the real concern for us all in the international steel community is what can happen in China to raise the relative price level of steel sold in China. Because at the present situation, China is the only country in the world that has an export tax on semi-finished steel, 25%. And obviously, the market then tries to find a way to get around that, and I agree that it is a crime that they are exporting square bars or billets as square bars. And China is possibly also the only steel producer in the world that has an export tax in the form of a restricted VAT refund on their exports. So China is restricting its steel exports, and I think we should be thankful for that. But the real concern is what can happen in China to increase the selling prices, so it's not interesting for them to export their steel in larger numbers.
Well, just like the export tax on semis, they have an export tax of 50% on long products too, and that was the main reason for those boron added wire rod exports.
Correct.
Just to turn, I mean, go around that export tax. Any comments?
No, we personally in our company and few Europeans, we have been working with our governments in terms of just warning about that, and we are working, but at this point it's difficult to make them understand that is a real problem. They say, "Wow, this is if there's anything wrong, it's done in China. So what can we do?" But obviously, we are trying to educate them a little bit and make them to see the effects of that, because it's really okay if the possible fraud is committed in China, but it's affecting our businesses very heavily. So we are working on that. So I think it's something that we need to do all in our areas with our political responsible, but it's sometimes difficult because it's on their understanding. It's just to getting their hand in a Chinese problem.
Actually, we had some colleagues from China attending this event. I'm trying to see if they're in the room and if they would like to share. Ah, yes. Can we have the microphone, please? Thank you. If you would like to share your comments, thank you.
Actually, here's the good news for our ladies and gentlemen. And just in last week, China customer stopped a case. We call this square bar export. Just stop the case last week, and I guess this is not a long-term business. I guess Maybe usually in March month, China do a lot of anti-fake fake product, and this business we named Square without bone added is actually, as this lady indicated, is illegal. But if it is with bone added and its Square it's hard to defend its Square ability. It looks just like the same, and in the customer list it's the same. It's not illegal, but if it's not with bone added, it's illegal. And China is now slowly stopping this kind of cases, both in customer activities and at the same time is stopping very slow through the local governments, the local billet mills. You can see that just as that gentleman indicated, the market force is drawing the billet mills into harder and harder situation, just like last month in Haixing, in Shanxi province, which mill just draw the HRC coil prices that week of the whole global market into a low point, and that mill just bankrupt. And I guess maybe in the next half year of 2014, more and more cases will appear. Who knows? But nowadays, Chinese mills are just suffering. The reason why they try to catch export orders, one is that they price difference maybe sounds reasonable due to, as the gentleman indicated, the tax rebate. And another reason is that when they get LC, they can get immediate cash flow from the bank, which is so short for them. They can hardly get the immediate cash from domestic orders, and that is a very big reason and very big problem for them. And as the bank is closing the doors due to the cashes like Haixing mills, they are getting real tough, and I guess that is when something gonna happen. Thank you, ladies and gentlemen.
Thank you. Any further comments on this issue, or from the floor? Okay.
Well, I have a very brief one. As far as I know, in autumn 2013, China has approved a policy regarding the addressing overcapacity issue in 5 industries. Steel is one among those, and actually the measures, at least those which are declared, they are very strict. In particular, banks are prohibited from providing financing to any new steel projects unless they are approved at the state level, so not even at provincial level, and moreover are not allowed to continue financing the projects which are already under construction unless they provide relevant documents, again approved by state authorities, that those projects are actually have reasons to continue. Of course, I don't know how visible those measures are going to be in the near future, but the intentions are there at least. I mean, maybe you can comment.
Thank you, Margareta. Any other questions? Not at this point anymore. Okay, let's move on with the prepared questions. Say, okay. This first one is on the scrap market. Yanis, you had already mentioned that the scrap prices seem to follow similar yearly trends during the past 3 years, though price levels have declined during each of those years. Do you think predictability is now higher in the scrap market? And looking at this picture, what would be the game changer in your opinion, if there is any?
So, It's important to know that because if you don't see the graphics sometimes, which you are not realizing, in different IREPAS meetings, we are trying, we are discussing, we are pushing price up or down, we are trying each one to find the space to make business. But finally the market has its own rules. This is important to know and to respect, although there are always. So I'm afraid the situation is not changing, or may change also if the new demand in the world will not create a market where the exports can be realized. But I have to tell you that there is also a balance in the world demand. I don't know if we realize that last year Turkey imported 2 million tons less. So these 2 million tons went somewhere. And we don't know how Turkey is going to be in the future. What's going to be this year? We cannot talk anymore for political uncertainty or instability and so on. But economically, I'm not so sure, although I'm not a specialist. There are a lot in this room. Maybe they can comment also. But there will be a balance anyway in the market. The market will. The problem is to have a stability in the prices. Okay, plus minus 5–10% is something logical according to the period, according to different unexpected situations. But if we have this stability, we know that we can buy in these prices, and there will be a market, and our clients, the producers, they know that in these levels they can buy and try to sell accordingly their products. Of course, they're facing other problems, as we heard during this discussion in the panel.
Thank you very much. Well, I will continue with the questions, but please let me know at any point if you have any comments to add or any questions to ask to the committees. So moving on to the next one. This is on the, once again, the crisis in Ukraine. Although it has already been mentioned that there are no predictions of a resolution in the short term, this question is on, again, short-term billet supply in particular. Let me read. The crisis in Ukraine seems to threaten the security of energy supplies from Russia to Europe and Turkey. Before the risk wave reaches these regions, do you think Ukrainian steel offers may become less competitive in the near term? Margarita, can we have your comments?
Well, I think it's more an issue not about the consistency of energy supply, but rather, which is also the case, but rather the price, for example, for gas supply to Ukraine. Because Russia already said that there will be no price discounts. For the moment, Ukraine has been until recently obtaining the discount for gas price, and gas, while the settled price was $400, and with the discount it was $250. So as of April, it's already should become $400. So it will definitely affect the competitiveness of Ukrainian steel producers, but at the same time, for the moment, unless there are some other issues involved, it doesn't seem that Ukrainian producers will become completely uncompetitive in steel products, considering the cost advantage they have towards the EAF producers, still in place despite the higher cost for gas. So basically, the Ukrainian economy is likely to suffer overall, but that's another story.
Any comments, Steve Isa? They may not be able to hear the microphone as just. Sorry about that.
Did the Russians already increase the price of gas to Ukraine?
Yes. As of the second quarter, they say no discount supply. The discount was $150.
So if you consider the fact that their gas is going to be much more expensive, and also their banking is going to be tougher and probably more prohibitive, so do you expect the prices of billets coming from Ukraine to increase very soon?
You see, but billet market is very competitive. So, in my opinion, it's not like, I mean, if there was a possibility in terms of supply-demand balance to hike the prices, we would have hiked them, right? So it's, I don't think that Ukrainian steel producers will be operating at break-even, or they are not doing right now, or they will not be, in my opinion, when the prices for gas are going to increase as of April. So they will simply make lower margins, I would say. And they will definitely try to increase the prices for billet, but it depends on ultimate market situation. Either they succeed or not, because market is very competitive and you cannot influence the pricing unless there is demand for this product at this price.
Well, you're talking about gas price going almost 100% over, and then you're talking about the financing probably more expensive. So I don't think they have such margins that they can just continue the same pricing with just playing with their own margins. It looks like they'll be forced to increase the prices, and obviously that will help the rest of the industry to follow, because they're major exporters.
Most likely you are right that efforts will be done, will be made to increase the prices. Either it's going to succeed, we will all see. I hope yes.
Okay. Tom?
Hi, this is a question for Margarita on the Russian steel industry. How does the Russian steel industry feel about potential sanctions against the Russian market due to the international crisis in the Ukraine?
Well, there is no, I do not represent an official position of Russian steel industry. There are some steel association which might be probably could serve as an official source, so it's rather my personal opinion. As I already mentioned before, there are certain concerns, definitely. It cannot, I mean, you cannot pretend nothing is happening. There are concerns which are related both to export, because, for example, US government has already declared an intention to or consideration to apply particular industry measures, industry-related specific measures, and steel industry has been mentioned. We hope that it's not going to come into play ultimately, unless, of course, there is an escalation of current resistance between Ukraine and Russia. So unless there is some armed invasion again into southeastern part of Ukraine, I hope industry-specific measures will not be applied. But again, as I already mentioned, it's a question mark on how it's going to evolve. I don't think that anyone in this room have some definite opinion in this respect. I mean, based on fact-based opinion. Also, of course, sanctions impact the economic growth in Russia, and this is more of a concern already now, because, as I said, Russian economy is coming into recession. It's already a consensus view of Russian economy. So, for example, for the second quarter, it's expected that there will be 0.5% negative GDP growth. There is capital outflow. There is currency devaluation. Economic growth is now mostly driven by private consumption. And as you understand, private consumption is not leading to increase in steel use, or very marginal increase in steel use. So it should be infrastructure projects, it should be fixed asset investment to sustain the steel consumption in Russia and to provide the space for growth. I think a lot will depend, of course, on how Russian government address those issues. So far, it's very difficult to predict because government has been postponing some of the projects, having other priorities on its agenda. So to sum up, Russian steel industry is, I think, concerned, though probably you will not hear it. I mean, there are no formal declarations about this, but of course, I mean, we are concerned, but we hope for better.
I guess this question should be answered by our American friends. They should know better. Huh? But my question is, what about the logistics issue? Because there will be, I believe, some of the ports will be transferred from Ukrainian side to the Russian, so there might be some trouble on the Ukrainian side as far as logistics are concerned. What do you think about this?
Well, I think it's better to ask colleagues from Ukraine. Definitely there will be changes, at least because we know that one of the main ports utilized in particular by IOD, by Metinvest, which is Zavlita, port located in Crimea, in Sevastopol, definitely it will be concerned. So either there will be some changes in terms of how the whole procedure looks like, obviously because you are now passing through the territory of another state, or, which is most likely, those volumes will be transferred to Odessa rather than going through Crimea. Also, a big question mark, but again, very difficult for me to predict, is how shipments from Azov region are going to be affected, simply because Azov Sea is now basically such producers as Metinvest, again, IOD, even Evras to some extent. We used to export certain volumes from Mariupol, and now it's going to come out of Azov Sea. You need to pass the Russian territory, basically. It's like Bosphorus, but as I already mentioned in my conversations with some of you, the issue is that Bosphorus, there are much more interested parties involved. So Turkey cannot simply like monopolize and set any kind of rate for transportation through Bosphorus. While in case of Azov Sea, it's only between Ukraine and Russia. So I would say very difficult to predict how it's going to be impacted. I hope that economic judgment will prevail, so there will be no major disruptions, but again, who knows?
Concerning the steel scrap quantities to be exported from Crimea, they told them that to the suppliers, I mean the Ukrainian suppliers, the ex-Ukrainian suppliers, that they will grant to them a 6-month period with the same status. It means, because you know, there is no scrap export tax for steel scrap exports from Ukraine. And then after 6 months, they will apply the actual export tax in Russia, which is 12.5%, but it's also decreasing every year after the agreement they reached with the World Trade Organization. So they are trying to find such, because also the transportation of steel scrap to Odessa, you understand that it will increase drastically, but it would not be better to pay the export tax for this. But they are trying to find such regulation. It's not so easy. It's easy to vote, but it's difficult to apply, to realize the results.
Thanks. We are certainly going through some interesting times. I can't remember if we had any more political turbulence and such kind of interesting issues in the past meetings. So, yeah, moving on to the next one. This is another interesting issue. I was also surprised when I received this question. When I first read it. I have been away from trading for over 10 years now, and I was really surprised. So let me read it quickly. Because of the word sanctions is being used a lot recently, and because banks are afraid of facing fines from Washington and Brussels, they are now putting on regular basis sanction clauses into irrevocable letters of credit. In short, that can, under certain circumstances, render those letters of credit revocable. Here is a sample of one. All parties involved in this documentary letter of credit are advised that specific sanctions, embargoes are imposed by regulatory authorities, agencies, including the UN, USA, and EU. against certain countries, entities, individuals, vessels, goods, insurance companies under those measures, XYZ Bank, may not be able to engage in the transaction, which means accept or negotiate any documents or settle any transactions, that in its opinion would breach applicable sanctions. This means, for example, if someone has a transaction in any way associated with any individual on a sanctions list, and that person is a shareholder in that transaction, the bank may choose to not effect payments. The words highlighted in its opinion are paramount in this. Shoot first, ask questions later, in short. In the end, such conditions take away part of the value of confirmed letters of credit and, as well considering them to be irrevocable, undertakings to pay against prima facie documents. Very big surprise to me.
It's a non-letter of credit.
So, anybody with any comments on this one? It's open to discussion.
Yeah, I think this kind probably, talking from the producer side, it looks to me as this is probably if you are involved in certain really dangerous markets, and that's probably more traders that you may find yourself in these situations. Obviously, I've seen sometimes LCs with and that started with Iran and things like that. There's some banks trying to put into LCs restrictions and let's say from their side restrictions to control the final payment. But it's been like very peculiar markets or some banks related to American banks. So at the end, what I mean is that you can escape that just going to another bank. Yeah, but it looks to me that's probably maybe traders, you can find probably yourself more in this kind of situations. But it's not. What I can say is that this is not general. So you can still trade with regular and usual letters of credit.
Normal letters of credit.
Normal, which are already a headache. Yeah. So if you put that on top, it's I don't know if you have any comment.
Someone wants to.
Okay, I'll come to you. Tom asked first. So
I tend to agree with Kim. I think the banks are looking for anything they can to protect themselves. Post 2008 and the way the international trading community works on steel, the banks are very, very tight. They're very controlled. They're very restrictive, and this is just an opportunity for them to say, hey, let's see what we can get away with. Let's see what we can tighten up. And I don't think, back to the original question I asked Margarita, I don't think trade restrictions will happen, in my opinion, personal opinion. I think, if Obama does anything, he'll go after the energy sector or he'll go after the financial sector and then hit trade last but not least, because I think that affects too many people in Russia and too many people in the U.S. economy. But thank you.
Thank you. Mr. Baisa?
Well, I'd like to hit on the banks, but really, this is not the bank issue. As traders, a U.S. corporation, if there's a sanction there, it becomes a force majeure. And our contracts always have force majeure. So if we're not allowed or things change that we cannot import, we will not import. So it really is a force majeure issue. Always has been there. It's nothing new. So don't blame banks. It's just really blame your governments. They make those decisions and we all just have to follow.
Thank you. Any other comments? No. Okay, thanks a lot. Let's move on to the next one. So, Kim, maybe you would like to talk about this. What are your thoughts on the European environmental taxes? Do you think those actions should be or will be followed up by other countries, or are they just meaningless extra costs?
Well, I think we live in a world that obviously we cannot say that there are meaningless extra costs, because we all have to think that our environment needs to be protected. But for Europeans, obviously, we always believe that we are sitting in a place where we are the first in terms of being hit with all these kind of taxes. But so the only thing that we can expect, or we are demanding to our politicians in Europe, is that through political or through different international organizations, they all what is applied to us, it's finally applied to everyone. Because if not, obviously we are suffering from unfair competition. But well, as obviously as responsible professionals, we need to accept that that we have to be responsible with environment, but we just ask the rest of the communities to be as responsible as we are.
Thank you. Any other comments? None, I guess. Okay. Oh, sorry, have I missed? So, excuse me. Go ahead, please.
I think you could say on the question is really, what do you do with those taxes? Okay, there are some governments that do tax, and the tax is spent on other issues. So when there's an environmental tax, it's just, you have to really ask the question, what do they do with the tax?
Just watch the news and you will see what they do.
Well, a good point. Mr. Batistas? Yeah, so just on your right, Georges.
Good morning. On this environmental tax that you are talking about, we have environmental tax in Romania, and the government imposed us to collect it from the individual traders. When a guy comes to your yard, you have to collect the 3% tax from him and return it to the government. And this is a really problem sometimes, because the guy simply say, no, I'm not going to pay it, and goes to another yard. Another issue that we have is that vessel demolition. Europe is moving very fast to adopt the Hong Kong Convention. No more demolition beaching. And it will also affect the Turkey, the Aliaga. People that they do have green, let's say, certificate for demolition will be able to operate. The rest, they will be closed down. And still is a confusion regarding who is going to give their license, who is going to authorize, who is going to give the qualification, what you need, is really confusion. So I think that for this year, we're going to see less and less demolition being done in our areas and in Europe. Thank you.
Thank you very much. No more comments. Moving on to the next one. Yanis, maybe you would like to talk about this one, if you don't mind.
Yes, although I think that mainly we discussed this.
Yes.
I don't know if somebody from Turkey would like to add something.
If you would like to
give
have
us
any
some
other
hopes
comments,
that
or
they will increase, although they will increase in spite of this, their production.
Or shall we just move on to the next one? Any comments? Let me read the question. Turkey, world's largest scrap importer, is going through a difficult period of time, both politically and economically. Do you think such will cause a further decrease in Turkish mills' demand for scrap? If so, what do you think the result of such a decrease would be for the global scrap market?
Anyway, I think it's not a matter of political or economical situation always plays. It's a matter of the international market. If they can sell the products, they will maintain the production. Let's hope at least that they will not decrease. I don't know, Mr. Darbeler. Yes, yes. Even some of them, they are not here.
Okay. Next question is also mostly answered by Margarita and the Billet Suppliers Committee. Let me read, maybe we can talk a little bit about the last part of the question, which is, let me read the question first. Before sanctions were imposed on Iran in 2007, the country imported over 12 million tons of steel a year worth around $6 billion today. Some economic sanctions against Iran were lifted in February this year under a temporary agreement, while a more permanent and wider-ranging lifting of the sanctions against Iran may be seen in the coming period as the Iranian administration moves to end the country's isolation. What impact would be the reopening of Iranian market would have on the billets and long steel products market in the Middle East and further afield, which was mostly answered, and which exporting countries are best positioned to benefit from the end of Iranian isolation? Margarita, would you like to?
Well, basically, as I already mentioned, we would only welcome if the sanctions are lifted, so Iran becomes again a player in the international steel marketplace as an importer for the moment, and it's quite clear that key countries who are going to benefit from it are Russia, Turkey, and Ukraine, basically, from my opinion.
Any comments, opinions on this one from the floor?
Just one. Sorry, I wanted to add that obviously in final long products also some like sections, probably some Europeans, that will be a release for, because in terms of sections, the European market is we got a good level of overcapacity, and probably that will be a relief for the sections market in Europe as well.
Thank you. Okay. The next one is on the anti-dumping case against Chinese wire rod exports and further implications, let's say. After Chinese exporters have been eliminated from the US wire rod market by means of the recent anti-dumping case, Turkish wire rod exports now seem to be filling the gap in the import market. The anti-dumping case against Chinese wire rod is widely expected to result in significant margins that will probably push them out of the US import market for good. Do you think Turkish wire rod mills will eventually face a similar case after a while, looking at US mills' recent practices? Kim?
Well,
this was answered partly by Bernd yesterday. I guess somebody asked this question. So go ahead, please.
That depends on the domestic U.S. mills. I guess is a fact that the market in U.S. is a net importer for wire rod. So that's what is happening now. There's a lot of U.S. customers just going around the world trying to find wire rod. So it's a fact that the U.S. market needs imports in terms of wire rod, and if Chinese are not there, someone has to go there, and someone has to sell this requirement of wire rod. If you then okay, that's it. That's clear. The market needs that. But then after that, what's going to happen after a while? What's going to happen with the U.S. mills? Are they going to react on that? Are they going to react on the increase of volumes if any particular country is taking most of the volume? That's something that needs to be seen, and probably the only thing that needs to be said is that maybe the people that now will replace the Chinese try to be responsible and reasonable in terms of pricing, in terms of everything, just not to disturb very much the market, because in any way the tons are there, so the tons are going to come anyway.
Thank you. We have also got some major players, major importers in the amongst the audience. So, any comments? Tom, would you like to comment? Thanks.
Yeah, I'm sorry. Yeah, I think that there's a role for imports in the U.S. on low carbon rods. The domestic steel industry there has the capacity to supply all of it. They just basically don't want to get to that level. They want the higher carbon. They want the value-added product. And I think will the Turkish eventually face a dumping case similar to the Chinese? I think it all depends on how the product is sold into the U.S. market. You know, is it traded into the market on a spot basis, or is it marketed into the market on a long-term basis? So the domestic industry on all products, whether it's pipe or beams or rebar or rod, know that we're a net importer. And are accepting of imports, so long as there's an acceptable, reasonable price spread that the Chinese never really respected. And so in the short term, no, I don't think there's any potential chance against the Turkish or anybody else, as long as it's done on a marketing respectful manner.
Thank you, Tom.
Being an ex-wire rod exporter to the U.S., I think the Turks have been exporting since 85 or so, so it's already been 30 years, and I remember there were many cases have been filed to several different countries during which Turkey was never being included, so I believe they will continue with the same behavior to exclude themselves from any of those cases in future.
Thank you.
I cannot say the same for the rebar producers.
Thank you. Any other comments? Yeah, please go ahead.
We have seen that in the Gulf region, China has recently become a great exporter of wire rods. With this new duty in US, how are they going to export into the Gulf region? Are they going to increase their exports to the Gulf region even more than what they were doing earlier? And what will be its impact on the prices, which is already coming down quite drastically over this, since January?
Okay, well, it's obviously that the tonnage that is lost in US needs to go somewhere else. We know that some of the mills, they are trying to diversify the product. They're trying to maybe revamp mills, the lines in terms of debarring coil. So they're trying to find alternative, not only just say, okay, let's go take the volumes and place just direct, place it into another place. They're trying some smarter movements, but it's obvious that that wire rod will go somewhere else. It's going to be MENA. I mean, it's somewhere, yeah. You got chances that you will see Chinese wire rod. But as I said, some of the tonnage is they are trying to diversify it into rebarring coil.
Is there any potential in your region for the Chinese wire rod? So good luck for you.
That's a very good way to put it. Okay. Yeah, apparently our former chairman's move from the stage to the floor has also increased.
I'm trying to be softer and nice. You're gonna get it. Okay.
Okay. So Willy, thanks very much.
Right.
Willy has to leave because of time restrictions. This session has been very interactive. Thank you for that, but also pushed our schedule a little bit forward. We have already discussed about this next one, the US scrap export, so I'm moving on to Spanish rebar export offers, which seem to be struggling against lower priced Italian offers. Oh, sorry. Yes. Okay, let me continue with this one. Spanish rebar export offers seem to be struggling against lower priced Italian offers. Considering the low transaction activities, which markets do you consider as alternative for Spanish rebar producers?
I guess they are talking about North Africa. I guess Spanish rebar exports.
Probably so.
I think the situation in North Africa is not. It's not really what is happening. Okay, we all play our role in the North African markets, but it's not really a big change in terms of balance between different origins on what we're exporting into North Africa. In any case, some Spanish mills we are obviously looking for alternative. We have been exporting to other areas, and not only, it's not that we are starting now. We are active in South America, we are active in Some of the mills have been selling rebars into US and a bit waiting for what's happening on the 18th. We probably will continue doing that. So we have our alternative in South America, and it's not, it's quite reasonable and stable these days. So it's not, there are no major, I don't see many major changes or threats.
Thank you. Any comments from the floor? Okay. The previous question, which I skipped, sorry, actually it was most discussed. Let me read. The cost of purchasing Ukrainian and Russian origin billets is getting even closer to the cost of scrap for the Turkish mills. Do you expect the market to find a certain balance in the near term? Margarita, anything to add?
Well, I think we have already covered this topic basically. So in the near future, we expect that Russian and Ukrainian origin billet is going to be a very competitive alternative to ferrous scrap for Turkish mills, basically.
Okay. Any comments from the floor on this one? No. All right. Once again, Chinese exports. Total quantity of Chinese rebar exports has increased to 6.77 million tons as per January figures of World Steel. It was 3.77 million tons back in January 2013. Low price policy of the Chinese rebar exporters keep increasing competition in the South American and North African markets. On the other hand, Chinese wire rod exports to MENA region have started to increase significantly following the AD case in the US. What's your expectation of China's output this year and their impact on the market prices overall? What's the likelihood of bubble bursting in the Chinese real estate sector? What impact would such an event have on the global long steel market? It's a disaster scenario.
Yeah. Anyone from the floor? No, I mean, okay, as you say, this is a disastrous scenario. It's true that we are living in a world, at this point in time, in a world where Chinese overcapacity is a fact and has been discussed here. I think in terms of debars, what we see is that a lot of the debars, they stay in Asia. That's why I said that Asia now belongs to the Chinese, because most of the debars, they stay there. And maybe also they come to West Africa. But in many other markets, the debar is a product, is a commodity, but it's a product that as it goes into construction, is customers, they are still a bit sensible in terms of quality, in terms of performance of the mills, and also in some markets you got some restrictions in terms of approvals. So on that's why debars they tend to stay more on Asia in terms from the Chinese. So what happens if the bubble bursts and if obviously if it all happens at the same time, we'll see. Yeah, but I don't think. Well, yesterday it was a discussion with our speaker economists. I think that the Chinese rulers they are trying. They know that they have to change the economic model, but they know that they have to do it in a slow way, because if they do it quick, it will be a disaster even for themselves. So all that happening together, I don't see it. In terms of wire rod, well, wire rod is more as there are less restrictions in terms of trading or importing wire rods or customers accepting any origin in the wire rod is getting the thing more difficult.
Murat, I'd just like to clarify one thing. We really don't know whether that 6.77 million ton figure is correct, but it does include Macau and Hong Kong. And last time I looked, it was around 2.5 million tons that went to Macau and Hong Kong per year. So it's not as dramatic as it looks.
No, it stays there. Rebar is not as dramatic as it looks. That's true.
Okay. Thanks, Michael. More comments, so moving on to the next one. This is for discussion by everybody. Australian resources body foresees iron ore prices to hover about $110 per ton FOB this year, before dropping to $103 per ton in 2015 and $87 per ton eventually after 5 years, mainly due to new projects coming stream. Do you think steel suppliers will find room to expand their margins, or steel prices will fall accordingly, pushing down scrap prices as well? Anybody to comment on this one?
I'm sorry. I'm just wondering who is the investor who is still keep spending money, thinking that the price of iron ore is going to be $30 lower than when he starts.
I think that this question reminds us that during the past 10 years, the margin spread in the total cycle of steel has shifted from the steel industry to the upstream iron ore producers who are enjoying maybe 50% of the total profit of a ton of rebar that's delivered to a skyscraper project. And the service centers and distributors have also increased their margins, and the companies involved in making the steel have had their margins squeezed for the last 10 years, except for this anomaly that we had in 2007, 2008. And what may be occurring in the next 10 years, or even after the year 2020, that maybe the margins for the steel producing sector will increase to the detriment of the iron ore producers.
Thank you.
I think that would be a nice scenario, but I really don't think that's going to happen. When I say this, what's not going to happen is the margins going back to the mills or the traders, or I think what's going to happen is that just prices will decrease. Then again, we're not too sure if the iron ore prices will come to 87, because keep in mind there is only 3 producers in the whole world. So I always have questioned when you have so few producers of iron ore for the whole world. They're not going to just let this happen. This is probably temporary, and you will see that they will regroup and they will try to get their regular margins. So regardless, I don't see that the industry will benefit much from it, and if it does happen, scrap prices have to follow.
No, I agree. I mean, they're talking about 5 years from now. I would be very glad to know what's going to happen in 5 weeks from now. So 5 years is too long. So thank you. Moving on to the final one. As steel industry players look for positive developments across the globe, the US and the EU are often bracketed together as developed economies, which are now indicating growth following the financial crisis, and where the prospects for steel demand are starting to look up. However, given the contrasting approaches to dealing with the crisis in the respective regions, with the emphasis on spending, like quantitative easing in the US, and getting the economy back to work, and with the focus on austerity in the EU and serious issues persisting as regards lending by banks in Europe, could the EU end up lagging behind the US in terms of growth? Could the EU be facing into a long period of just very slight growth or stagnation? And will steel industry players' hopes for more robust steel demand in Europe be ultimately disappointed? Surely this comes from a European member.
Yeah.
It's a matter of the policy of the new European leadership. It's going to be elected in May. If they will continue the same austerity policy, most probably will be disappointed. But let's see.
Personally, obviously living in Europe and living in Spain, I think that in the street things are starting to look brighter. I mean, obviously the economic figures, and yesterday we saw all the comments from the economists. It's true that Europe, because of the decision-making process is slower than US, because in US basically Washington decides for the whole country. In Europe, in every country, which will be the equivalent to the states, to every state in US, we have to decide, and then they all go to Brussels and discuss again. So that the decision-making process is slower, but the dynamism of the European region cannot be denied. So, I mean, I don't see ourselves just, well, you are in Barcelona, you see how the city moves. I mean, when I see the word stagnation, what does that mean? We're all going to go to sleep for the next few years? Or what is stagnation? Yeah, so I understand what is stagnation, but I think that sometimes when things are bad, people tend to all just get into the bad mode. But in reality, I think that we will see Europe coming back very soon. I don't see Europe, because also they compare Europe with Japan. Japan is what is happening in Japan. Japan is it's like a world itself. I mean, Japan is not Asia, it's not the world. It's just a world. It's a very close society, and they live through this stagnation period because they just resolve everything in themselves. Europe is like very open. It's a very open society. So I don't think, honestly, living in Europe, I don't think that we're going to live through a long period of stagnation. I don't know what, I'm not prepared myself to do that. So I think it's going to get better. Yeah.
Thank you. Any other comments on this one? From the floor? No? Okay. Thanks for optimistic opinion. Okay, this concludes the question and answer session, question and answer stage of this session. It's been a highly interactive session, so I would like to thank you all for your contributions and for your patience, because we have been late on our schedule. And I would like to thank you, ladies and gentlemen, for your contributions. I also would like to thank all our distinguished speakers who have shared their knowledge and experiences throughout these 2 days. And of course, I would like to thank first of all our conference sponsors.